Hello and welcome to ATFX's PCE Price Index Preview. My name's Nick Twidale, I'm the Chief Market Analyst. And as always, please do subscribe to our channel. That will keep you up to date with all the goings on in the foreign exchange and financial markets. What we're going to do today, we're going to look at what is, as most people in the market know, the Fed's key inflation data, what they're looking at the most when they're making their rate decisions. And most people that are watching the market very closely at the moment may know that those Fed decisions could be changing slightly with some of the data that we've seen out the US. And if we get a change in data this week from the PCE, then we could see some massive moves in the market. What we're going to try and do today is look at some of the key products that most of our traders trade. So we're going to look at gold, we're going to look at euro, we're going to look at dollar yen, we're going to look at the cable as well. Cable's sitting in an interesting position. Let's have a look at the PCE number. It is key. It's a month-on-month number. The Fed really like it because it takes away some of the disparity that you get from the data on some of the other numbers they look at, mainly the CPI, and they tend to look at it more. Now, it's a nice month-on-month number. It's coming in or expected to come in at a 0.3% increase this time round. If we do get a change, and it only takes a 0.1% change in this number, we will get moves. And as I've said, because now we are looking at fundamental data, last night we got a lower print in the consumer confidence number, and it really did hit the market hard. We saw another step down in yields, saw another step down in dollar. Dollar lost 0.5% across the board. We're expecting a difference in this PCE number to make some big moves in the market. So I'm just going to check over to some of our charts and we'll look where those trading opportunities could be coming. And here we are. This is the cable chart. Now we're looking at the dailies because this PCE number can have a massive impact on the longer term trades that people are looking at. As you can see, cable, along with a lot of the other majors, have a really sharp rise recently. And this is what I was talking about before, where the dollar's depreciated. It's come up from these sort of sub 122 levels. We're up at 126.65. That trend line that we're seeing coming in here, not one of the best trend lines. It's only hitting a couple of spots, but it is relevant and traders will be looking at. Now, we are a few sessions away from this PCE number, so we won't be, we may be slightly far away from this, but at the moment, we've got a couple of key resistance technical levels on the top side that could prove fantastic trading opportunities. So what you'd be looking for here is if we do get a print lower than that 0.3%, so if we get a 0.2 or a 0.1, what you would see is probably see a break of this resistance level. This is the trend line resistance line. Plus, this is a key one, especially on the dailies, the 200-day moving average. That's coming in at 127.86, so about a big figure higher. But if we do get a lower hit, especially if it's more than that 0.1, that 0.1, 0.2, it would open a way for a move through these resistance trend lines and push up to the next sort of levels, which is coming in around about 132. That's for the longer term trade. Now, a higher print, which would suddenly turn around what we've had over the last few weeks and just think we may see that pullback on rate cut expectations. That'd see the cable get hit, the dollar appreciate, and we've moved back down towards these levels. First support coming in around at 122. So that's going to be, at the moment, a fantastic trading opportunity for cable. We've got a similar setup in euro. I'll move across to that now. Moving over to the euro chart. Once again, this is the daily chart. So this is gives us a longer term view. Slightly different positioning with the euro, but once again, similar pattern, right? We've seen this massive move up from where it was approaching parity. There were a lot of talks of parity party, obviously coinciding with the start of the Trump administration, inflationary pressures. Now, this move back up to the top side is taking us all the way up to 105 again. That's a dollar move. That's been the dollar retreating. That's been those yields I was talking about before. And we're hitting highs that we saw in late Jan as well. So key position here that we're sitting in, key technical positions, not a particularly great technical trend line resistance, but we're hitting those highs again. Now, you will see some people, the bears out there will be looking to fade these moves. It was the high that we saw before, but it will come down to this PCE data on Friday. Once again, if we see a higher print, a 0.4 or a 0.5, expect the dollar to be bought. That will take us back down to challenge these lows, and we could see that parity talked about fairly soon over the next few weeks. Again, lower hit, 0.2, 0.1. Dollar selling will hit the market. Euro will get taken. We'll break through these highs. We'll break through this trend line. As I said, not particularly the greatest trend line. And the target will be that 200-day moving average, which is a big level. And a lot of people look at that on the dailies in particular. Above there on a longer term move, especially if it's a if it's a much weaker and we start pricing in another rate hike more than the one that's already priced in for the market, then you're going to be looking to longer term trades, going to be looking for moves back up to 110. So that's where we're sitting with the euro. Excellent trading opportunities at the moment in cable and euro. We're going to go and have a little look at dollar yen now as well, because that has been volatile and it has been moving very much on dollar expectations. We're on the dollar yen chart now. So this is the daily again, longer term plans. We've had a huge move. So, you know, in euro, we were talking a few big figures. Dollar yen, we're talking, where were we here? Tops up 158, 159. We've been at like 10 big figures. So that's the great thing about trading dollar yen, is you get those extra moves, you get those extra big figures. I've left this downside former support trend line in because it was a great trading opportunity on the technicals, and that coinciding with that 200-day moving average. So we're sitting mid-range now. Other traders are now drawing. We'd have support coming in on these lows. They're just about 148 somewhere. Once again, PCE, if that comes in lower than expected, a 0.2 or 0.1 point, we're going to be going down and we're going to be targeting these kind of levels. So another 5 big figures lower, 144, 144.50. That's the longer term trade. And that fits in with the interest rate differential with the Bank of Japan, where we're looking for rate hikes from them. If we're increasing rate cut expectation in the US, it's a big trade. It could really accelerate. Alternatively, a nice higher print, 0.4 or 0.5, it will go back up to look to challenge. And you can see where this former support line is still relevant. It will come in line with that 200-day moving average around 152.50. Former support lines there, and this resistance trend line, it could be coinciding right about that. That would be a key resistance. So that would be the target for traders if we get a stronger number. So once again, great opportunities. The good thing about the opportunity with dollar yen, if we're sitting just above these lows, if we get a weaker number, it will break lower and it will break lower harder. And once again, dollar yen, you're likely to get 2 or 3 big figures in it. Euro, 70 or 80 points on the initial move. Now, finishing off what we're looking at today, I'm going to bring you into the gold chart. Interesting thing about gold is it hasn't been moving too much in line with the dollar so much, but fundamentals and the dynamics in the market do seem to be changing. I think personally, I'm feeling if we see the top side move with gold, that's where we could see an acceleration move, because we've seen pricing move down on rates in the US. If that turns around with this PCE number, and it could do, if we get a stronger number, then you're going to be selling gold. And obviously, the other thing that could move in with this gold move is the fact that it's moved so much higher over the last year or so. I think I look back at a chart just over 12 months, it was a 48% increase. We've seen like nearly 15% increase this year alone. So massive moves in gold. Now, top side, there's not really any trend line resistance because these are all-time levels. So we're waiting for basically a little bit of time before we can draw the technicals in. So really, the only thing you can look at on these longer-term charts are these highs. So high, all-time high there, 2,956.15. If we get the weaker number, we could see it break through and we'll sail up to fresh new highs, which, let's be honest, is going with the trend. I think the risk is with the downside because it would be counter trend at the moment. We get a stronger number, it really turns the market around. And we're seeing profit taking flow in gold because we've seen such big moves. It could really look to fill in these gaps that we've got on the longer term. And you can say this 200-day moving average is all the way down here at 2,579. That shows you how quickly this move has moved in the gold, and therefore how much of a retracement we could get. So trendline resistance, in trendline support, sorry, we have no trendline resistance. We just got highs at the moment, 2,720. Beneath that, we're back down to that 200-day, 2,579. We could get that move. And I think that's a real risk for gold traders if we get a higher number. I think if we get a lower number, the trend resumes and we move higher. So there's your trading opportunities for the PCE. It's a fascinating number. And there's a few bits coming out. But I think the very interesting thing that we've got now, maybe from last time we got the PCE number and even the CPI to a certain extent, is that the market is now looking much more tightly at US data rather than the geopolitical influences we were getting from Trump calls. One of the big banks, I think it was State Street, did a bit of analysis on what was moving. It was stock markets, it wasn't FX or commodities, but they were pricing in 40% influence of the geopolitical or tariffs in particular a month ago. Now it's down to 4%. So that's why the market is changing in looking at how it trades the market and that dynamic. So data has become much more important, and there's nothing more important to the Fed than this PCE price index. So big moves coming this week. That's it from me. As always, if you need anything from us at ATFX, please do get in contact. Please subscribe to the channel if you want more informative information, both from me and from the other chief analysts out there. And good luck with your trading. Good luck on Friday. Thank you very much.